The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Welcome from the offices of Duke & Duke at 100 South Broad Street in Philadelphia, Pennsylvania. I posted the first chart of what we're talking about today. We're going to be talking about pattern recognition, and I got this quote from one of our friends here at TFNN. It says, "I don't trust words. I even question actions, but I never doubt patterns." And that's what pattern recognition is really all about. There was also a dude way back in the 600 BC, the same time as our good friend Pythagoras. His name was Confucius, and he also had some things to say about learning and also about patterns, things of that nature. And I'll post this one in to take a look at it. You'll see it says, "I hear and I forget. I see and I remember. I do and I understand." And that's really what you have to do when you're trading, is you've got to learn what you're seeing, remember it the first time, and then you practice it. You do it and you understand it by doing paper trading and then live trading, and then more of your confidence will come to you. On my first trip to China in 1988, I went to the home of Confucius in Beijing. It's in a really bad area of Beijing. Of course, it wasn't that bad area 600 BC, but it's a beautiful wall. Well, it's not beautiful anymore. It's sort of torn down. He doesn't have the same status in China that he does in the rest of the world, especially in the United States. And his name in China is Confuzi, and they make it into Confucius, of course. But it's a big walled community with incredible trees that are, 500 years old, that have probably since been dead and replanted a few times. But you can see that it was a palatial palace at one time, but it sorely fell into bad repute over the years. It's still there if you ever get to China. Whether it's worth going to it or not, you have to be a fan of the man himself, I think, in order to go see it. But for me, it was a pretty interesting time of what happened in China during those times. Now, the first chart that we're going to talk about, since we're talking about patterns here and the fact that we're in the midst of something getting ready to happen here in this gold market, we're going to take a look here. The Duffy in the room asked if he was a trader, but Duffy, you've not read his life story. He was the famous rice trader that had a hedge fund, back in 592 BC. He was averaging about 37% a year. Then later on he went into soybeans. Duffy, you got to get on your medication, buddy. Okay, let's move on here. You can see the gold chart here is in a very, very tight pennant. You can see that we're coming to the end of it. We've had lower highs now. The one that we hit on the 18th was a 61% retracement, and then this morning we hit a 61% retracement of that move up at the 1227 level. If this is correct, and we do break to the downside, we're going to have a really strong ABCD structure from up at 1262 all the way down to 1191, and we know that's $70. So if you had 1239 as your high and you subtract 70 for that, that's going to take you down to the 1165 area, and that's where we would be looking at a potential spot for a really good bounce. Would have a really major ABCD pattern going. Now, what's different about this chart than the silver chart is the silver chart already made that ABCD correction. That's really that's a very well, silver's been much weaker for one thing, but that's a very important factor from what I'm looking at this particular time. So we want to watch that with a little bit of a little bit of importance, I would think. I wanted to be to show you the someone's asked a question about onions, folks. These vegetables that you see, broccoli, cauliflower, onions, all this stuff, scallions, all this stuff is traded, and the way it's done is it's done through merchandisers that go out into the field, and these are private fellows. I happen to know two of them over in California that actually buy fields of red peppers and tomatoes and green beans and all these other things, and they speculate on that field coming in or not. They pay the farmer, and then they resell it to Safeway or Albertsons or Kroger's, whoever it happens to be. But there's a big market in that, and the banks are behind them. There's a lot of credit that goes back and forth, but that's a huge market in California, all the way through the Coachella Valley, which is down by Palm Springs, all the way up through the Central Valley, and it's really amazing, the stuff that they do. But they are definitely speculators. They are really big into it. Some of them carry insurance, some of them don't. But that's the main thing of what's going on. There's a family in Southern California, in the central area, called the Tisharas. They're actually a Basque from Spain, and they control most of those vegetables through the Central Coast, through Santa Barbara, all the way up through Monterey, not into the wine country because that's a totally different product. But that's how that works. So there's not a license exchange for it, but there's certainly a lot of trading that goes on, with that thing. Potatoes are no longer a contract, Mr. Z. That was done in 1970s when Ray Simplot, I think was his name. I believe his first name was Ray. He reneged on the potato contract, and it broke the contract and broke the exchange, and he ended up paying a big fine. But that was the end of potatoes. So. Unfortunately, the Supreme Court did not rule in the exchange's favor. They ruled in his favor, and so for that reason, we don't have licensed potatoes anymore. But that's the way it goes, and I don't think anybody's missed it very much. We'll have to be able to see. Yes, it was J.R. Simplot, and I believe the R stood for Ralph. I met the man once, but I don't remember what his first name was. I remember. I think it's Ray, but I could be wrong. Okay, let's get back into some of these markets. We've got a really big pattern happening here in the Australian dollar. I'm going to show you the chart here from our good friend Jim Bartolioni that we posted in here. We've posted it in here 3 or 4 times, and we're going to bring it updated today because we've got the Australian dollar is getting ready to make a move out of this 0.5 level. So we'll see you'll see that we've had this 135 pattern going back over the last 15 years. This is a monthly pattern, and so we want to watch this very, very closely as far as what we're watching with the Australian dollar, because it is starting to break out to the upside above this 172.45 level. It's moving quite nicely. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we're going to expand on this 135 pattern that Jim Bartolioni sent us that goes back to 2001, showing the 135 higher bottom pattern. And what we're doing now is we're showing you the daily chart of, when the bottom came in. You can see the pattern as it formed. Then we had the really good rally. Then we had the 61% pullback, and now we're breaking out above. We're almost ready to break above the C point, which takes us up quite a bit higher, up into the 74 level, basis the Australian dollar. Now, one of the questions from one of our dinners is, will this have an effect on the gold market? Well, I've looked at a correlation between the Australian dollar and longer term. It has a pretty good correlation, but shorter term, the correlation is not that good. It has a far better correlation with the oil market, in my opinion, than it does the gold market. But remember, gold market is it's a huge market that people that are certainly of the point that gold is the ultimate safe haven, which over the years it certainly has been. But we'll have to as far as the correlations, intermarket correlations like that, I usually refer to John Murphy's work, and I look at one chart at a time, folks. That little saying that I put in there is you don't trust words, don't trust actions, but do trust the patterns. The patterns are the sum total of all the buying and selling that's going on. It's a no BS thing. There's no BS in this. They can lie to you. They can cheat you. They can give you misinformation, whatever you want. It doesn't make any difference. They can't hide from you. And that's the whole key to pattern recognition, is that you can't hide from you. You're able to at least decide, where the market's going based on probabilities and repetition, and then you can also quantify your risk. That's the real beauty of what we're trying to do here when we're watching some of these things. Now, I've had a question about the crude oil market. The question was, is there a valid head and shoulders pattern in the crude oil market based on a half-hour chart? And so what I did is I ran some numbers, put up some cycle things, and you notice here over the past 10 days we've been in this trading range between 34 and 31. You can see the cycle bottoms from the 11th of February into the 16th. That's nothing more than a 5-day cycle. That's all it is. And it just splits it up into half-hour bars, and it trades almost all the time, so there's not a problem there. But you can see the cycle bottom. But if you'll notice the head and shoulders pattern, we have a perfectly symmetrical head and shoulders pattern. And by that I mean the left shoulder and the right shoulder are at the same price, 33.90. The head was a little bit higher at 34.20, so it's a perfect head and shoulders pattern in time and price. It's already started to work. It's backed off, back to the 50% level. The $64 question is whether we're going to break out above that 34, because if we do, that means we're going to be heading towards 37.50 as one of the targets, somewhere between 36.75 and 37.50 if the crude oil can do that. If not, we'll expect the crude oil to come down to the 30, could come all the way down another 8% down to the 30.60 level and complete a 61% retracement of the move, from the bottom. So that's what we're watching in the crude oil. So the breakout, if we can get above that 3,400 level, that would be a really good sign to have a chance for more rally in the market. Now, I've had some questions about the movement in someone asked a question, is that also a triple top? Actually, a triple top, the right shoulder should have been higher than the head, but to me that's close enough to a triple top because they're so symmetrical that it's really be able to see what's going on. I don't know. Someone said that Bloomberg said it's not a head and shoulders pattern, but all I can tell you is looking at this on a 30-minute chart, folks. I mean, the actions are there, the words are there, but the pattern's there. I mean, it's a perfectly symmetrical time between shoulder, head, and shoulder. What else can you ask for? That's the definition of it, and they're at the same price. So that's basically what we're watching here. So we'll certainly keep an eye on that. We're going to cover the S&P here in just a little bit. I will be doing the show for Tom in the next hour. So I'll be doing a 2-hour show today. So any help you can with the call-in questions would be certainly appreciated, and we'll try to give you some good information of some of the things that we're looking at here in the market. But with this full moon that we had yesterday, it's really really important cycle. And the next one is not, the next major cycle that we have, folks, is really not due for 2 weeks, and that is the one on March the 8th when we have the new moon and then we have an eclipse. And so and plus several planetary things. I don't know if you folks had a chance to look at the moon last night, but it was really bright here in the desert. It was almost like daytime. It was so bright. And when it first came over the horizon, over the mountains, it was almost like you could reach out and touch it. So it was really, really something to take a look at. Okay, now if we can go to the next chart here, I want to go into the S&P 500, or the S&P futures, to go over that, because we went through that several times yesterday, giving you an idea of, where we were going to be. And all I need to do now is to find it. I put it right here. There we go. I got it right here. We'll be able to take a look at it. This is what we were looking at yesterday. And let's just walk through this so that we can do it step by step. You can see this is what we were watching to see these equal moves that were occurring in the S&P 500 futures, the E-minis. And that's exactly, what has happened. Now, all I need to do is to find the updated version of this, and you'll see that it proceeded to do exactly as what we thought it to do. It went up to the 942 level, and then it, of course, backed off a little bit, and I've got this chart, and I'm going to find it someday, just hopefully in my lifetime. And this is the second part of it. Nope. Going to have to get that at the break because I certainly don't have it now. Where did I put it? The problem is I've got about 50 charts on this desktop to try to get enough information to you folks over this time period, and I'll be darned if sometimes I put them in the right areas and I cannot get them to line up exactly the way that I want, and that makes it a little difficult, to pull them up. And that is the $64 question that I'm trying to get over. But I will get this chart, and we will put the more put this thing up at the break so we'll be able to see it, and without any trouble at all. But it will take me a few minutes to get that chart ready, unless I have it on the short term. Nope, I don't have it there, so we don't want to worry about that. But I will get this chart up for you. Don't worry about that. We'll definitely get the S&P covered, and also the Nasdaq, because we have a big divergence here between the Dow Jones and the Nasdaq and all these other things, because they're varying. Only the Dow Jones is the strongest. It's the only one that's making, the ABCD format. So 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're going to take a look now at this S&P 500 that we've been watching each day. As you can see here, this goes back over the last 7 or 8 days, 9 days, and you can see the first box on the left was back on the 16th when we had a 23-point correction. Then we had another one on the 18th, and then also another one on the 19th. That led to the ABCD pattern that took us down to 1899. Now, from that level, we rallied up to the high that we were looking at yesterday at 1942. The high got to be 1943.50, and since that time, we backed off 20 points. We didn't quite make the 23 points that we did on the other two. That's either very bullish or very bearish. But since that time, and that's been almost 24 hours ago, that we've had a sideways market. We've not been higher than 1938, which was a 78% retracement of that smaller move there. So we've got a boundary here between these levels. The problem that we have from a technical basis, on a timing basis, if you believe in the full moons, the full moon came in yesterday afternoon, and it only has a 2-day orb, which gets it out all the way to Wednesday. So we could still make another high up here at the 1947 to 1949 level, but it is starting to lose some momentum. Now, if we look at the Nasdaq and we looked at the S&P 500 and also the New York Stock Exchange Index, those have not completed ABCD patterns like we have in the Dow Jones. The Dow Jones made a perfect ABCD pattern, and that's the one that is, by far the most reported, even though it's the least accurate of any of the things of what's going on with the market. So my feeling is it will most probably be looking at a market that wants to roll over and move down here. Whether this is going to be the big move to the downside or not, I don't know, but we have been rallying a month, since our low that we made back on January the 20th. We made a major low, so we're into this rally 1 month, and Gartley said to sell in any ABCD patterns that the market gives you during that time, and this is certainly one of those. So I'm leaning more to the short side, than I am to the long side. So we'll keep this in line, because this could change quite a bit. The European market, someone's asked a question about the German DAX and the FTSE. Those markets are very, very weak. They are hardly bouncing to even from the low highs back there. They're giving very, very meager bounces. They're just being quite quite a bit. Now, yesterday we had a pretty good move in the stocks. The Dow was up 225 points. The S&P was up 25, and we're up about 65 points in the Nasdaq. But if we don't follow through today, that's going to be a pretty bad omen, I would think, because it looks like that we are, we're in such a bear market, folks, that it's absolutely scary. I occasionally listen to the commentators on CNBC or Bloomberg, if you can find a channel that doesn't have the politics on, and I just can't believe that people get involved in something like this. But the power is so great that I guess they're lulled into it and they become rock stars. So what are you going to do? But that's neither here nor there. But the chart that I wanted to bring up is the one that's going to lead us to the promised land, I believe, and that's the one from our good friend Jim Bartolioni, which shows the long-term symmetrical pattern that we had in the New York Stock Exchange Index, that told us that the top was somewhere around March 19th, and fortunately, let's try May 19th of last year, and fortunately we had our good friend Norm Winsky from Astro Trends on, and 2 days later we had Shane Smolian from wolftrader.net, and both of them were predicting a move sharply lower to the downside, and that's what we've had. But folks, look at this chart and study it, because this is really an important chart. It goes back over the last 13 years. If you believe in patterns, you can see the perfectly symmetrical ABCD pattern between 2009 and 2015. The retracements were exactly 1.27. The breakdown, as you can see, after the market broke those lows, how it rallied back and touched the trend line on the downside, that occurred, back in January. And as you can see, that's a 20-min line. Both of those lines there are 20-min lines, and those act as catapults to the downside. And we've since gone, a little bit lower in this, and we've actually drifted lower, and we've had this 1 month consolidation where we've really gone nowhere. We had a really chance to come out of here, folks, with a lot of power. We did the first 4 or 5 days. And since that time, the market has stalled, and I don't think that's a very good sign. But we'll have to wait and see, what happens. Overall bearishness in the market is as bad as it's been in a long time. There was an interesting chart that one of our subscribers here at TFNN, well, I shouldn't say subscribers, one of our regular listeners, Mr. RK, sent a really neat chart showing how these asset funds for Ridex, how poorly they're timed. In other words, they're doing the exact opposite of what the market is usually doing, which is this is about the way it happens, because they're not actually doing anything with with the patterns like we are. And if you look at this chart really closely, you can see that we've just formed a really nice ABCD pattern here on the 17th of the month, just last week, and it shows they're putting a lot of money into the bearish part of the market, when actually the market has had a pretty good rally from that bottom. So whether this means anything or not, I'm not sure, but it's just a pattern that I wanted to to bring to your attention, so that you'd be able to see it forming when it's happening. We've had some questions about the moves in the currencies yesterday, particularly the British pound, because we broke over 250 pips last night. We rallied 100 of those pips back, plus a little bit, but it started to roll over again. The euro continues to go lower. Folks, the euro has a price objective of, the 99 is what the long-term weekly is, but on the dailies, we are going to be running up against this trend line today, and we're going to be down 9 days today. And I posted this over the weekend, and now we've added 2 more days to that, so that you'll see here that once I put this chart up in the euro, you'll see that we're coming down to touch the 61% retracement number, down to that 109.50 level. So that's down about another 50 points from where we're setting right now, but it looks like that's where it wants to go. Anything below that line, if you see any trades below 109, which is down another 100 pips from where we're trading right now, you're looking at the really big ABCD structure from August to December and December to February, and that takes you to the promised land at 99, at 100. That's par, and that would also be a 3 drive to a bottom pattern, on the long-term weekly. So we're going to take a little break here. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives.
If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back, folks, and we're going to talk just a little bit about the Japanese yen versus the U.S. dollar. I've posted the chart in here so you can take a look at it because we hit some major support down here at this 786 retracement last night at 111.80. We've now rallied about 60 pips or 40 pips from that level. So we could be making a pretty good bottom in here, so we'll see if that's going to be the case. Stocks opened, looks like slightly higher here. We've got the S&P trading at about 1935, and we've got the Dow Jones about unchanged on the day, it looks like. And crude oil is starting to back off a little bit. We need to get the crude oil down to about $32 a barrel. That would complete the 61% retracement for this head and shoulders pattern that we talked about earlier in the show. And I would certainly look at it at that level because you're going to be looking at higher bottoms and major support at that time. So I would keep that in mind. We'll watch how that works. We'll see if this keeps going on like we think it is. Okay, so we have stocks rallying a little bit. We started out very poorly in stocks with the decliners, about 7-1 to advancers, and now that's turned around. So we're in the midst of a little early morning rally in the first 15 minutes. The gold is still holding the area of around 1220. As we mentioned earlier, that 1227 level was the exact 61% retracement of that previous high that we made back at the 1242 level. Of course, the high was at 1268 a week on last Thursday. So we'll keep that in mind also, and we'll see one that's going on to this late to see what's going on here. Okay, now the next question that someone's asked me was about the Treasury bonds. The Treasury bonds are making a 78% retracement from the last move that we had, and I wanted to bring this up so you folks can see it, and we will open it up here. And you'll be able to see Treasury bonds as they're attempting to test this 78% retracement from the low we made just 3 days ago. Yeah, well, actually, it was the 17th, so it's been almost a week ago. So that is holding so far. But if we break that, this tells us that this major top that we have up around that 170 level is certainly going to put the bonds down another 5 points. Wow. Excuse me, I had to sneeze. Anyway, that would tell us the ABCD structure on this would put the bonds another 5 points lower down to that 160 level. I read an interesting article. One of my friends forwarded and said, you've got to read this. It was from John Maudlin from Business Insider, and it was a very, very lengthy article, and I read it, and folks, I swear to God, I'm not the sharpest knife in the drawer, but I'm certainly not the dullest. After reading that, I was more confused than ever on what quantitative easing actually is, because his premise was that it wasn't nearly as bad as people said it was, and yet there were a few people mentioned the article that said it was bad. So you pays your money and you takes your choice. It gets back to that very first poster that I put in here, that actions talk and BS walks, but the patterns don't lie. That's the bottom line. So keep that in mind when you're looking at this, because it like it says, you don't trust words, you even question actions, but don't doubt the patterns, because if there's more buying, prices are going up. If there's more selling, prices are going down. That's the bottom line. There's nothing neither here nor there that you can take away from it, but that's pretty much what you're looking at. But when I read it, I swear to God, I read the economists that I read John Williams, and then also I read Ben Hunt. And they're very concise, and they keep it so that this old boy from Indiana can understand it a little bit. But I end up going back to the charts. That's the main thing that I look at. That basically tells me what I'm doing. When I started doing this stuff back in the early 60s, when I was in Indiana, my college professor in statistics, he had a PhD in economics, he had a PhD in statistics, and yet what was he? He was a technician. That's all he did. He just looked at bar charts. He didn't have any moving averages or anything. He just looked at trend lines and bar charts and little cycles, and that's pretty much it. There's an old saying, the economist predicted accurately 4 of the last 13 recessions. So that's true of anything. Hey, we all make mistakes, folks. I make them. Basil makes them. Everybody does. But the difference is how quickly do you recognize your mistakes? Roy Longstreet, who wrote The Viewpoints of a Commodity Trader way back in the 1950s, it says your first mistake teaches, the second mistake kills. Your first mistake, if you're wrong, is teaching you something, and if you don't correct it, that's the one that hurts you. You get into a bad trade, and you don't take your you pull your stop, or you add to a losing position. You make that second mistake, and that which kills you, and that leads to that market adage that I'd much rather be out of a market wishing I were in than in a market wishing I were out. So always remember that. So if you start questioning what you're doing, you've got to be wrong. My first rule on this beautiful painting, oil painting behind my desk here, is number 1 is when in doubt, stay out. And if you have any doubt of what you're doing, you're really on thin ice, and it's in the middle of August. So be really, really careful. Someone's asked me a question about my experience in the 70s peak. I'll tell you, it was amazing, because I was really young, and the markets were going up, and I was bullish, and I was buying every 16-day cycle low. In other words, the market would go up for 12 days, back off for 4 days. I didn't understand Fibonacci until 1971, when I became being mentored by John Hill. He was the one who told me about Fibonacci, and he gave me my first proportional dividers that I still keep to this day, which showed the relationship of 618 and 1.618. But basically, I bought that all the way up into 1973, 74, and built up quite a bit of money back in those days and spent a lot on the way up. And fortunately, it helped a lot of people on the way up, was good, because during the 6 weeks between the 28th of July, 1974, into October of 1974, I lost it all. Like what is that Groucho Marx said, he inherited a great fortune, and he used it most on sex, drugs, and rock and roll, and the rest of it he just lost. So I didn't do any of those things, but I added to losing positions. I didn't use stops. I thought I was a golden child and I could get it all back. And when I lost all the money, I went back to my college professor, Jim Noblet, and he laughed at me. And he said, "You think this is the first time this is happening to anybody?" He said, "Now go back over your statements, figure out what you did wrong, and get back on the horse and ride it again." And sure enough, about after I got the Gartley book under my belt, that's what I did. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and this is Larry Pesavento for TFNN, and I will be doing the next hour show because all of our leaders are in New York, at the Traders Expo. I used to do that every year. I did that for 17 years. I quit it a few years ago. We did it last October. They asked us to go one more time to Las Vegas, and so Sarah and I went over to meet some good friends, and we had a really nice time meeting some folks that were there. Tim Borkin was actually there. He and Jim Sugarman actually started that thing back in '96, I believe. So it was a lot of fun. Okay, we've got the market today. We're going to be starting out relatively quiet. We're up slightly in just about everything, but we'll have to wait and see what's happening. The gold, we've talked about it. It's in this really tight triangle. It needs to get above 1230 per ounce in order to break out on the upside. On the low side, it needs to get below 1208. And if it does that, then we'll be looking at probably $30 moves on either side of that. Silver is much weaker. It just looks worse and worse all the time. The crude oil that we talked about earlier in the show is really setting up nicely now for a move down to $32 a barrel, which will complete a 61% retracement. It will also be a Gartley, and it will be the price that we're looking at from that early chart where we had that head and shoulders pattern. We would have higher bottoms in there in crude at $32 a barrel, because you'd have the 135 rising bottom pattern that was popularized by Roy Longstreet and his son Bill. So that's what we're looking at in the crude oil and also the gold market. Stocks, we're over this full moon, and it should come down. Doesn't necessarily mean it's going to, but there should be a lot of resistance in stocks should we get up to the 1246 to 1249 level in the S&P. That would be major resistance at that point, so you'd want to be watching it, really closely. But early this morning in the first half hour, we're barely up a little bit, so we'll see if that's going to mean anything. So 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.